Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. Let's jump right into it. Today, of course, is the Fed policy statement and rate decision. We're anticipating that later today. And right now in the morning, as I'm recording this video, we have the S&P 500 having a big update. We're up 50 handles, or 1.25% in the S&P 500. And of course, the VIX, not surprisingly, is down over 2 vol points. We're still over 30 in the VIX. That's an elevated level for the VIX, to be sure. But throughout this bear market, we have not seen any panic buying in the VIX or panic selling in the S&P 500. The VIX has remained subdued. We've been only 39 was the peak in March, and really since then we've been about 35 on the high for the VIX. So we have not seen that panic buying. And for me, the logic is simple. This bear market so far has been characterized by the potential for a recession and the need to revalue high valuations on stocks. Valuations are coming lower, growth is getting a little bit slower, and we're kind of seeing an orderly correction in the market. For there to be a shift and go into panic correction, I think we're going to need to see a credit risk, which we have not seen as of yet. But remember the old saying, when the U.S. sneezes, the rest of the world gets a cold. And this week we're starting to see some concerns out of Europe. A slowdown in the U.S. Could make the slowdown in Europe much worse. The last time that happened, 2011, you can remember a lot of countries needed to be bailed out. If there needs to be bailouts this time, will the stomach be there to do so, especially when one of the biggest problems is inflation? So that could be a significant risk that we're watching in this potential black swan type of event. Now, all that said, last week we had a big sell-off in the market. We had really high inflation data. The market said the Fed needs to raise 75 basis points. That's essentially priced in right now as I speak. And the market actually does well on Fed days. And we're coming up to the end of the quarter and the end of the June expiration cycle. So there could be a potential for a rally up into that 4,000 area. That's a nice round number people like to look into. So for me, that might be what the rally this morning ahead of the Fed decision is looking for. For Equity Armor Investments, I'm Joe Tigay.